Gold Invest. Explore opportunity.
Hi, welcome for this fireside chat, which is kind of a sequel of a row of deep dives that we did over time. Looking back, the clear observation is that the company is growing, and what you're building is a growth platform where the industrial operations and the industrial business is actually fueling and supporting currently the technology business that is representative of the future. And of course, you've been growing on different metrics like team revenue, even EBIT is constantly improving. But the one thing that resonates with me a lot is when you speak about capabilities of the company. And if you look back now where you were maybe a year ago to where you are today and where you want to be in a year, how would you frame that with regards to capabilities? Is that a good proxy for describing progress in the company?
It's certainly, I think a very important metric, Sven, around the sort of company we want to be. But I guess before we get started, just wanted to thank you again, Sven, for the opportunity, and looking forward to sort of digging into a few of these topics. I think the observation that we're growing on a range of metrics in terms of our financial performance, in terms of our team, in terms of getting close to our customers, I think it's a great observation. And I think in particular, building our capabilities and why that's important, I think touches on something quite important, Sven. And I guess if I may give you a little bit of an overview of how we think about it. So if we think of the beginning of our journey as sort of a tech company, say 4 or 5 years ago, it's a very conventional technology development sort of mindset. Technology is leaving the laboratory. How do we roll this technology out? And you have one view of the world. But during that process, one thing we've invested a lot of time in is understanding our customer. Who is our end user? How do they procure technology? What problems are they seeking to solve? And that's dynamic, of course. These resources are changing. These challenges are changing. We've just had an election over the weekend. The operating environment is changing. So being able to incorporate all that information into what the market is expecting of us, and us to be able to constantly pivot and iterate and reimagine ourselves and how we can best grow to address that market need is something I think that's very important. And I think where you see companies that fail to do that, I think it can present some challenges. They have a very fixed mindset of where they want to go as a company. But for us as a technology-based business that's trying to solve problems that the industry has failed to solve to date, clearly there are a range of challenges to being able to achieve that. And the way we've developed our capabilities around initially technology development, that's something we've spent a fair bit of time talking about, but also around being able to roll out your technology. So we need to be able to manage the building, operating, installation of this sort of equipment. And ultimately our end users, even as recently as our master plan 2 years ago, Sven, in the case of our CSG technology, our view at that time was, we have this interesting technology, it can solve all these problems for industry. But as we've gotten into the details, work with partners, work with stakeholders, we've realized that industry expects us to take more of a leadership role. This is our technology. We know what we can do with this technology. And we don't necessarily have to own and operate every bit of infrastructure, particularly where there's natural owners. Like, we don't need to be running a chemical plant. We don't need to be running a brine transportation company. But we need to be thinking about who would be running that? How would this value chain look like? What are the commercial models that are required to address that challenge? And that's the sort of getting into the details that's a very significant undertaking, and without putting too many financial metrics about it, but we're talking about challenges that involve transporting billions of litres of brine, hundreds of truck movements, hundreds of millions of dollars a year of transportation, waste disposal, processing related costs. And last we checked, we're, I think, a $30 million market cap company. So within our capabilities, we're spending a lot of time thinking about how we can solve those problems. And we've tried to strategically, the revenue growth provides one window into how the size of our business is growing. Our headcount has sort of been doubling roughly every year as well. So that gives a bit of a insight into today as an organization. We can walk into one of these projects, assess the requirements, design, perform some engineering related studies, fabricate equipment, test that equipment, deliver, install, commission, and operate 5, 10, 20, $30 million pieces of, very sophisticated water treatment equipment with very little involvement from any third party. So, certainly I think that's a big step change in where we've come from, Sven. Yeah.
Well, you just mentioned, by the way, the recent election that happened over the weekend. Ultimately, we're talking about the major QBS Brine project, which has a political angle. Is there any impact or on that project politically that's worth talking about, or is it a non-event in your mind?
No, look, it's certainly something we've had some questions, even from some shareholders. I think I had a couple of shareholders reach out to me asking which way they should direct their votes to support the company. Of course, from a Parkway perspective, we're very apolitical. We operate in the environment we find ourselves, and we'll support and collaborate with the government of the day. But without going into all the details, just at a high level observation, Sven, a couple of things I'll point out. We have 3 levels of government where we operate. We have the local government. We have a great relationship with the local government. They're very pro-investment. They're interested in economic development of their region, creating high-paying jobs, bringing technology to what was previously a agricultural-based sort of economy. So there's strong local government support, and again, we have a great relationship. There's state government, so the Queensland government, and there was in the last year a change of government in Queensland. There's a coalition government in place. They're very pro-investment, pro-developing of more gas, including coal seam gas, to sort of underpin economic development. And what's important there, the main coal seam gas wastewater management framework is a policy that was put in place in 2012. So that's been in place for 13 years. And we've had changes of government, and that policy has been stable over that entire period. So that's very reassuring from a regulatory perspective. And then, of course, at a federal level, we have the Labor government returned. They're quite supportive of the primary environmental legislations, the EPBC, Environmental Protection Biodiversity Conservation Act. That's been in place for many years. That's quite stable. So together with all that policy and regulatory framework that's been in place for a long time, is very stable and provides strong framework to support the sorts of developments that we want to be pursuing. Yeah. And it's important not just for us, it's important for the industry as well. These projects take decades to develop the upstream resources. These LNG investments that are being made in Gladstone will run for decades into the future. So regardless of which way the political winds may blow and the pendulum swings, I think everybody understands it's very, very important to maintain a stable regulatory framework. And I guess another related consideration I think it's important to be aware of, in addition to what the policy framework is at the moment, there is already many, many millions of litres or billions of litres of waste brine already sitting in ponds. There are existing commitments associated with those that will require, these projects have been operating 5, 10, 15 years already. Some of them past the halfway mark, where they're getting close to a point where kicking the can down the road is not going to cut it any longer. So they really need to be making some commitments. And really, from a Parkway perspective, we've obviously spent a lot of time and effort to put ourselves in a position where we don't not only have the technology, but as you picked up on, we also have the capability to be able to deliver that technology, because you obviously work in clean tech and those sorts of sectors. I'm sure you come across lots of very interesting technologies, but often the proponents can lack the capabilities or the partnerships required to take that technology out of a R&D type sort of phase and be able to deploy it.
Yeah. Well, we were addressing the political environment, but of course, the other proponent is the industry itself, and you just said it. they're proposing to grow and stay for decades, probably. They should know that their problem is ever growing, if you like. It's 2 years now that you're promoting to become the next best available technology for the integrated treatment of those problematic brines in multiple steps. I'm just wondering, you took the choice to not only address one company, you really wanted to go across the board and get on board all the other players as well. I'm just wondering, how are they coming along? Are they slowly kind of, well, it's about credibility as well, building that credibility, I think, with those large companies, being a small, relatively small company, and showing them that and making them believe that we not only have the technology, but that we can actually manage this. How far have you come along with that process?
I mean, I think there's an important milestone to point to, Sven. I think at the AGM last year, in November last year, so that's about 6 months ago, we outlined a particularly important pivot where up until that point, our view through the master plan, whilst we developed what we believe makes the most sense for the industry to be able to consolidate their waste brine, concentrate it and convert it to green chemicals, for us, we were essentially an outsider with some ideas. And the view that we put forward at the AGM is we need to be taking, rather than be a passenger on other companies' own plans, we need to be developing our own centrally located infrastructure and be involved in that solution development and delivery. So that was a important sort of pivot that we announced about 6 months ago. And during that time, what we've identified and sort of disclosed over the last 6 months, particularly in the most recent quarterly, is we've identified a couple of strategic sites that enable us to be able to develop critical infrastructure that helps us deliver the solutions that industry requires. And the approvals process, the investment required, and the partnering process is very specific to a project site. So if we were to approach, and we're working with many of the CSG companies already at the moment in a range of capacities, and many of those CSG companies are actually existing clients of Parkway, Sven. So we support them with a range of water testing or equipment or infrastructure already. So that goes back to that credibility and capability development. So we're an approved vendor for many of those gas companies already. In addition to the existing gas companies, there's emerging gas companies that are yet to enter commercial production, but they've been recently drilling, and they're evaluating how are they going to be able to develop their projects, how are they going to store their brine. So they have to apply and seek approvals to be able to develop their resources. So we're working with a number of companies to develop solutions rather than a retrofit, but to be a key part of their development plans. So that's something we're spending a fair bit of time doing. And in terms of those existing sites that we're putting forward, we're working with industry. So a couple of the sites that we have earmarked at the moment are proximal, as in neighbouring, within a handful of kilometres of some of the largest coal seam gas sites. So they've deliberately been shortlisted to be a logical solution for a couple of the large players in the coal seam gas industry. And we're having a series of discussions around how do they get involved, how do they support us, do they participate in some sort of reserving some brine treatment component, do they participate in some sort of ownership or tolling agreement. So that's the process we're working our way through at the moment. And I think off the back of the recent quarterly report we released a couple of weeks ago, Sven, we provided a little bit of colour in that we're having sort of commercial discussions and strategic discussions. And I think in a moment, but a really, really important event in the rollout of this technology is us being able to highlight a strategic site that we want to be developing our project, because being close to road or pipeline or power, or that will give I think, industry and shareholders a bit of visibility of what we're looking to achieve. And in the meantime, in the last 6 months since we announced this strategy, we haven't been just sitting around looking for sites. In the meantime, a couple of these sites, and we outlined a couple of options in our quarterly report, we've been performing a range of feasibility studies internally. So at this location, what sort of brine volumes could we process? What sort of power is required? What are the transport routes? What sort of chemical quantities could we produce? What scale of investment is required? What's the development path look like? And I think an important perspective, just to sort of backtrack just for a moment briefly, Sven, around the master plan, just to sort of reiterate how that plan came together. The way that plan came together is we conducted the most comprehensive study of brine inventory in Queensland. So far more comprehensive than what the industry has been able to perform even to date through a range of different resources. And that enabled us to understand where are these brine resources, what's the composition of the brine, if we had to consolidate these in different locations, what makes most sense in terms of risks, transport, concentration, water, a whole range of different metrics. So now that we have these couple of sites under option, we're working to sort of convert them into leases. It won't be starting at, step one. The moment we sort of provide the visibility on our preferred site or sites, that will immediately have already been, quite advanced around the feasibility sort of studies. And we're also doing some work working with regulators around being able to transport waste brine from a different project. That's a environmentally relevant activity, taking that brine and moving it to another facility. And you need environmental approvals to be able to do that. So we're working with the regulator and other stakeholders to be able to solve, because this is a first of a kind project we're looking to develop. So the regulatory environment and other stakeholders have to do some work. Having said that, we consider ourselves a front runner, and that's when we talk about best available technology. Part of our job is obviously developing the technology, but the technology is only part of a solution. And what we're spending a lot of time at the moment is developing the enabling infrastructure, developing the business models, developing the strategic partnerships that help us really deliver a viable solution for industry. There's very few efforts to develop solutions, and in the meantime, we're doubling down with continue optimizing technology, continue developing delivery capability, continue securing the most critical sites and infrastructure. And I know I'm on a bit of a rant here, Sven, but I think it's important to make an important point. And part of that all relates to what does our end user want from a solution provider? And we put ourselves in the position, if I'm a major CSG company, and I've been working for that company for 10 years, and I have to put forward a solution to my asset team or a risk team or to my board or to the regulator, who do I want to be the operator? How big do I want them to be? I want them to be experienced. I want them to be established. I want them to be of a certain scale. I want them to be able to provide around-the-clock sort of services. I want them to be partnered with tier one contractors. So really, a lot of the work we've been doing in the meantime in the last year or two in this space is really to try and level up as an organisation. So, and down to ISO certifications, all the QA, QC that you need. And I think for those who don't work in the space, oil and gas is a very risk-averse industry. Like when you're dealing with, they have to over-engineer things. Everything has to be rated for high pressure, high temperatures, spills, double containment. So really, and we're familiar and we can certainly operate at that level, but a lot of the work we've been doing in the background is to ensure that Parkway can operate at the level industry requires us to operate. Yeah.
What always impressed me with your undertaking here is that you're the first company to really take a holistic view of the issue that is coal gas brines. This is a large project that not only will last for decades, but it will also take a long time to be fully built out, because we're talking about at least three levels of treatment. And so how do you envision this to play out? Because ultimately, as much as I think investors appreciate the thoroughness of the process, they also like it to be speedy and they tend to be impatient, like myself, for example.
I think you're being a bit unkind to yourself, Sven. I think you are a patient and strategic supporter, but I think in terms of, you're right, there are a lot of steps involved, but I think it's important to be precise and make an important distinction here. It is not true that we need to successfully execute all of our plans, including everything in master plan, for us to be successful. What I would suggest, if we were to do that, we would certainly be a multi-billion-dollar company, and we're sitting here with a $30 million market cap. So just because we've outlined a vision for a holistic industry-wide solution, backing us ourselves and our technologies to be able to deliver a solution, is not to say that we only succeed unless we solve all of the industry's problems. Of course, we would love to be able to have the opportunity, and certainly the way we're developing our business is trying to put ourselves in a position that we could achieve that. But I would say that a few steps into that process, a few further steps into that process, I think we will, have the opportunity to be a much larger company. And in the eyes of, if we were to take market, valuations or multiples as a metric, I think that would already mark a very, significant value creation event. So to go back to your question around the critical steps, perhaps from where we are and where we want to get to. So we have two key parts of the business within Queensland Brine Solutions that provide very different functions. They have very different sort of investment profiles, and they perform two different things. And I'll just define them very briefly to sort of make the rest of the conversation make sense. We have a Queensland Brine Management Complex, and that's basically sits in the heart of the coal seam gas industry, consolidates brine from a range of different sources, pre-treats that brine, cleans it up, concentrates it as much as we can, potentially all the way through to a salt product, depending on a range of factors. So that's one central infrastructure hub. And then we have a separate function, which is we've previously referred to as our downstream hub. And that's really a brine electrochemical complex. And all that does is it takes the salt from that upstream facility and it converts that salt into a range of very valuable chemical products. Now, we've divided that up because the sorts of investors, there are people who build chemical plants to use salt as a feedstock ordinarily, and they produce industrial chemicals that they already sell. So we've divided those functions to be able to specifically attract a strategic investor who's perhaps a natural owner of that sort of infrastructure, or at least a cornerstone investor, because they may want to access the supply chain, they may be trading in those sorts of commodities. So that's the downstream plant. And the upstream plant provides a range of brine processing solutions. And really, if you think of it from a coal seam gas company's perspective, really, that's just a liquid waste management solution. They're in the business of producing natural gas. They're not in the business of producing hydrochloric acid. So really, they interface with us. We take their brine. We provide an end-to-end, fully audited, fully traceable solution that they're paying us good money to make their waste go away. We process that. We convert it to green chemicals, and we're delivering what we're committing to our client we're going to perform. Now, each of those steps, although they're related, so we deal with a CSG company, we treat the brine, we produce chemicals, and we sell those, we're pursuing each of those in parallel. So at the moment, in terms of that upstream plant, we have two particular sites we're working on at the moment. We're performing feasibility studies, engaging with regulators around the regulatory pathway. So by the time we have approvals on site, we already have a feasibility study completed as well. And ordinarily, as you know, Sven, a junior mineral exploration company may be down in tools for 6 months, they finish drilling, they spend the next 1 year doing a feasibility study. Because we have, a team of 60, 70 plus people with a range of technical skills, engineers, we perform these tasks internally substantially. So they're tasks we're performing routinely on a rolling basis. We're not reporting to market until the appropriate time. But that shortlisting or disclosing a key upstream site, who we're partnered with, what the feasibility studies for those sites look like, are certainly near-term objectives of the company. And certainly in the current quarter, we're hoping to be able to provide the market some detail on that. Mm-hmm. And on the downstream site, because this is substantially proven technology and not necessarily, whilst Parkway has its own technologies, we're pursuing a path at the moment that we can use proven off-the-shelf electrochemical technologies, and we're working with a specialized subsidiary of a global engineering company that we have an established relationship with, and we are performing a range of engineering studies that will support a full feasibility study on building a full chemical plant, and that will provide us with the option that, subject to feasibility and having a suitable site, that should make sense as a standalone investment proposition. And we're the proponents. We own 100% of the equity in that project, conceivably up to 100%. So they have their own typical project development sequence in terms of performing some scoping studies, which we have already done, securing and shortlisting preferred sites, performing more detailed feasibility studies, securing approvals, securing some or making some sort of final investment decision that would have to be supported by a range of agreements in terms of access agreements, infrastructure agreements, offtake agreements, all the conditions precedent to being able to make a final investment decision. So we're certainly hoping in the current quarter to be able to provide the market not just with an update, but a timeline, what the critical path for each of those sites looks like. And in addition to providing some visibility on what those two work streams look like, we disclosed the detail last week, Sven, that I think is important to maybe explain for a moment. One of the plans we had in mind was we'll run this upstream plant in the heart of the coal seam gas industry. That's where the brine is. That makes a lot of sense. And we'll run our downstream plant perhaps in a more strategic, infrastructure-rich environment, close to maybe where the potential end users were. That was our thinking at the time. As we've gotten into the details, done some of these feasibility studies, engaged with regulators and other stakeholders, the fact that we need to develop two particular sites that are in parallel as a small company, even pursuing those through approvals, presents some challenges for us. And there's also some benefits of developing these plants together. So the first plant produces salts that goes into the downstream plant. The downstream plant produces waste brine. That's one of the byproducts. We have a plant that processes that brine. There's a lot of synergies potentially with integrating these two projects into a single site. So we've spent a fair bit of time exploring, rather than developing half a dozen sites upstream and downstream site 500 kilometres away potentially, why don't we focus on, even if it means initially we can solve 30, 40, 50% of the industry's problem, this is still a massive scale project that, can generate, very, very significant value. I mean, hundreds of millions of dollars value annually. So that's certainly of a scale that moves the needle for us. So a little bit of I don't want to call it a pivot. It's not a pivot as much, but maybe just a reprioritization. What development path makes the most sense based on our latest assessment, and keeping in mind that's informed by a range of stakeholders, industry, regulators, etc. So that's something we're exploring. And I guess maybe another point, we already have sites that we could proceed with at the moment, but there's a couple of developments in the background that we want to get some clarity on. And one of them is a particular site that isn't specifically in the coal seam gas industry, but it's close to the coal seam gas industry. But it's already been zoned for heavy industrial, special industries, such as what we're doing. And that's a site that's controlled by a tier of government that we have a relationship with. And it's a competitive process, not the brine management element's not competitive, but the site's being made available for high value industrial applications. And we've responded to this request for proposal, and we've provided a very, very detailed proposal. And we're quite hopeful that site may be our preferred site. But and we're waiting to get some visibility on that in sort of the next few weeks, next month or so, around whether that's likely to proceed. And if that were to proceed, we would double down on that site, and that site would enable us to build upstream, downstream chemicals, logistics, potentially even renewable energy infrastructure, make it into a whole precinct. But we don't want to overly be reliant on that option just at the moment. We're just advancing these in the meantime. And I guess, from my perspective, I'd love to be able to provide the market with site A, this is what we're doing, this is where it's located, these are the sorts of things we could be processing at this particular site. And no one's more impatient to provide the detail than myself, Sven. But on the same note, what would be really dumb is if we highlighted a particular site and then 6 weeks later we jumped to another site because that had come through and our proposal was awarded and we
Yeah.
secured some advantageous option. And there's also I don't want to sort of overemphasize the political element. And I don't mean political as in, which side of government is in power, but I mean political in terms of these are investments that will be strategically important to the state and very significant industries that, contribute billions of dollars in royalties to the state of Queensland. And ultimately, any plan we disclose, we want to do that with the blessing and the support of government ultimately. We think that's thoroughly achievable. So I think, as a small company, there's a temptation to come out and share some details. And, we've sort of succumbed to that in the past ourselves. But this is ultimately, we're outlining infrastructure that will be operating for decades into the future, potentially 30 to 50 years into the future. And I think it's important to do that, with the genuine support of all stakeholders without any particular party feeling, wrong-footed or blindsided, perhaps. So just a little bit of, some of the considerations. That's not specifically holding us back, but it is just, it's important to do things, with the broadest support possible, I think.
Well, thank you for basically giving the color and detail on where you're at, and it's encouraging to hear that you are actually evaluating and making progress in your evaluation. The one thing that caught my eye, though, in your recent quarterly was just one sentence where you mentioned that you have actually built a pilot crystallizer. And to me, what I immediately assumed, rather than knowing, assumed was, okay, this is the one pilot that you would then eventually use and have it already sitting in your backyard to demonstrate, for example, the viability of this industry of this process. Can you talk about this crystallizer a little bit more?
Yeah, for sure. Good observation, Sven. The scale of the crystallizer will be too small to be useful for like a on-site installation. So it is more of a pilot scale rather than maybe an on-site demo or a more commercial scale. And it is a rather odd thing for a tech developer because there are established crystallizer companies. You could reach out to Veolia or Swenson and procure a crystallizer. But there are some important capabilities that we as a technology company have developed in-house. And without sort of going into all the details now, but I've had a few shareholders that have sort of inquired about it. So I might speak to it for a couple of minutes if that's all right, Sven, because I think
Yes.
it probably provides a little window into sort of our technology development. 5 years ago, we had a PhD student who I co-supervised, and one of my colleagues, Professor Michael Dew, co-supervised. For 4 years, this PhD student concentrated on crystallizing salts out of very concentrated hypersaline solutions and producing very pure salts and optimizing the process to use the salt production process as a purification process. So it's not, the objective isn't just to produce salt, it's an important separation process. And this is very well understood in the chemicals industry, in the pharmaceutical industry. But we have in-house capabilities in this area. And as we're moving forward and looking to be able to continue scaling up and optimizing our process, rather than sharing a lot of our process data with a crystallizer OEM, for instance, we form the view that we have sufficient in-house expertise to develop our own crystallizer to be able to install a dozen probes and level indicators and visualization probes, sort of state-of-the-art equipment. Just to give you an idea of one of the probes, Sven, we have this Mettler Toledo probe. It's a camera that sits on top of the crystallizer. It's $250,000 worth of equipment we acquired a couple of years ago. And it measures the crystals, shows you how the crystal is growing. It measures the number of crystals and their average size. This is very, very sophisticated know-how, and that's the sort of information that enables us to be able to work with tier one energy companies, mining companies, engineering companies to recognize we're the process experts. We have the know-how. It doesn't mean we can't work with equally or even more established and larger players, of course. Of course it can, but it means we enter those conversations from a perspective of mutual cooperation or mutual NDAs rather than us as a junior company and the experts will tell us what needs to happen, because that strips a lot of the intellectual property from us. That means they own intellectual property of a crystallizer. Depending who they're partnered with, they might get a bit excited and think, well, hang on a second, we might be able to do some of this Parkway stuff ourselves. And I'm not suggesting that's their motivation, but my job's to build the widest moat around our technology as possible. And that's what this crystallizer design, in-house simulation, in-house fabrication at our Tankwell division, in-house piloting, in-house data analysis, which is super cool. And this is just the sort of work that just happens in the background. But yes, that capability and knowledge will further help us scale up our technology. I think it goes to that confidence and credibility you were talking about as well. And also, I think is gives us more confidence in our own technologies and what can be achieved in sort of a commercial application. Now, I'm not suggesting we're going to take those designs and necessarily go build our own crystallizer, but it will give us sufficient data that we can decide that these are the parameters in a data sheet. Can the crystallizer OEM give us a price? And they might be asking about what about A, B, and C, and we can sort of wave that off and be like, don't worry, we got that under control. So yeah, no, I think that's a and I just cherry picked that example, to be honest, Ben, because it aligned with process, QBS, fabrication, Tankwell, a few parts of our business. But what I would suggest is we routinely provide equipment and capabilities to different parts of our business. And I think when you were talking about capability before, 3 or 4 researchers in a laboratory performing some very detailed work, all of a sudden they need to remove some silica and they need some reagent or a chemical dosing or an agitator or a specialized nanofiltration membrane. In a typical research environment, that's a 3-month delay. By the time you identify, go find a supplier, raise a purchase order, it has to be approved. You import the equipment. It's expensive, but more important than the dollar cost is you have research. Yeah, exactly. And if you look at our R&D activities, and I think last year we received a $600,000 or $700,000 return. It'll be substantially higher this year. You can sort of back calculate that we invest in gross terms, like in kind and university contributions and grants, a couple of $1 million a year in R&D. That's $40,000 a week. So guys sitting around waiting on equipment, etc., that's a significant undertaking. So this isn't some part-time researcher that is tinkering in the laboratory. I mean, this is not just industrial research, but efficient industrial research. So we have a global mining company visiting our facilities next week who has engaged us. I think we provided an update in the quarterly. It's a state-of-the-art critical minerals project, global miner with brine management challenges. They've previously paid us. They're paying us for additional piloting type work to help unlock the challenges with that brine. And the only way you do that is you build a credible team, key capabilities, and demonstrate that you can, deliver a solution. So
this is important because I think that might get a little lost due to the focus on operational, let's say, profitability, that you have a very actually active research development department, and you are at the same time heavily investing into the future of the company. And what that does, technology, what I come to realize is for Parkway, what technology will do is a lot of things. It opens up maybe bigger, higher margin, certainly higher margin businesses. That's I think a path ahead even regardless of the big QBS development, it's something you will have access to, and even Tankwell, previous company, couldn't do the way you're now able to do it. So I think that research is the money is well invested, and you might want to emphasize that a little bit more in your quarterlies from time to time. I didn't realize you were actually really investing $40,000 a week in research development. That's impressive.
And I mean that's a gross number, of course, Finn. I mean
Yes,
we get a large proportion of our
I know.
cash investment as an R&D grant. Victoria University, who we've been collaborating for 10 plus years. I'm an adjunct professor at that university. We have a whole bunch of research colleagues at Victoria University, as well as our own in-house engineering team. I think it's maybe. Thanks for picking up on the R&D elements, Sven. And maybe sometimes we shy away from it a little bit. We don't want to come across as, you know, a team of researchers who are just interested in going down every interesting rabbit hole. And, you know, those people that's important for that part of our business to perform that. And you know, maybe we've been a bit gun shy around emphasizing it recently. But I guess maybe to sort of discuss the implications of that for a moment, Sven, if you look at our recent quarterly results, operating business, generating cash, small operating profit. But we've gone and invested more than the free cash the business is generating. And, you know, generating an operating profit is, you know, from where we've come from, I think an important sort of turnaround. And I think that's a trend that we expect to continue. I'm sure there'll be some ups and downs, but I think we outlined 12 months ago and, you know, sort of 3, 4 years ago from zero revenue to, you know, now generating reasonable revenue, small operating profits. Scaling that up is important. But of course, if we weren't reinvesting those cash flows into R&D and investing type activities, of course, we could perhaps make the business look more profitable. But I think this is a trap that I've seen a few businesses fall into, Sven, particularly when management teams become too short-term focused. You know, I can think of a couple of peer group companies that have let go of their process engineering team, got equipment fabricated in China because it's cheaper, and quarter on quarter manage to increase their top line, but they can never quite generate an operating profit because they're getting into commoditized solutions. They're not differentiated. They don't have a moat. They get into bigger projects. There's bigger players who are the big dogs, you know, in the league. You get into smaller projects. There's mum and dad outfits without overheads. You can't make money. So that's definitely not where we want to be, and quite the opposite. I mean, I deliberately made reference to the moat we are building in the Queensland Brine Solutions, that over time we genuinely feel that our sources of sustained competitive advantage are actually growing over time. And that doesn't happen because we want it to. That happens because we're investing in R&D, we're investing in capability development, we're establishing a business here. In the next 1 week, I'm heading to a couple of conferences, been invited to several events with, you know, the likes of Veolia and Queensland government and local council. So investing the resources to be able to grow those sources of competitive advantage. And I think if you want to build a technology business and generate, you know, a business that can grow and maintain its profitability sustainably, you need to be differentiated, and that's where the R&D plays a key role.
Well, I think we should look at wrapping this up, and of course the kind of the typical question at the end of such a conversation would be where, you know, I think we've gone into quite some detail here with crystallize and capabilities, but talking, maybe trying to paint a little bit of a bigger picture. Where do you see the company being in a year's time, and maybe even beyond that? Can you give us a little bit of a guidance where you see the company going in a year's time?
Sure. I can provide a year's time. Maybe if I can be a bit looser with the time frame, I think I can provide you a clear picture of what the end game is, Sven. So a year is obvious is a cross section in our path, and I can come back to that. But I think what would be important is what's the end goal here? Or so from my perspective, just as we have a industrial part of our division of our business, and we have a technology part of our business. I see ourselves having a brine operations part of our business, and that's essentially the Queensland business. And within that brine operations business, I expect us to have a site where we have contracted tankers to go and collect brine from a number of major coal seam gas companies. They're contracted to us. We have a contract with the CSG companies that every tanker of brine that we receive, it enters our facility, goes through a weigh bridge. We take a sample of the brine, we measure the volumes, we keep track of how much brine we're processing. End of the month, we send an invoice to the coal seam gas company. We've treated so many million litres. It's $4.5 million for the month. Send us a check, and we use those funds to run our brine management complex. Ideally, we'd be partnered with a waste management company that provides waste management services routinely. That's part of leveraging our capabilities to be able to work maybe under the white label of a larger player who routinely runs those sorts of businesses. They manage all the compliance related to those sorts of activities. So we may, in order to fund that, we may sell down our interest in that facility anywhere from 10, 20, even 50% plus, depending on how, what made sense. And at the same time, we would have potentially a co-located chemical plant that we would partner with a major chemicals company. And again, they would be routinely running chemical plants, and we would be essentially have very little to do with the operation of that plant. We would have a salt supply agreement, so we agreed to provide them certain quantities of salt. And depending on the financial model, we would potentially be paid for the salt, receive some sort of carried equity interest in the project, potentially capture some royalties. So that business should be generating us operating revenues from the waste management business, generating royalties and revenue from the chemicals business. We and our team will provide a range of additional services around brine management, and there's some specific activities that our team is best placed to provide. And ultimately, in order to make that business operate, we may even decide to sell an interest in our Queensland Brine Solutions business if there was a strategic investor that made sense to participate. And the way I would see it is Queensland Brine Solutions would pay management fees back to Parkway. So Parkway provides technology, capabilities, fabrication, a whole range of sort of technical services. And those management fees at commercial rates come back to Parkway. So for Parkway to be able to own a material interest or all of QBS, and then own a material interest in two strategic infrastructure assets that are providing critical services to industry, I think is super valuable. And in time, there'll be opportunities to scale those plants across larger capacity or additional sites. But at that point, I think that would just be a growth story at that point. And
yes,
depending on how these things progress, there's often larger, better capitalized companies that are often better placed to deal with that rollout story. Once you've got the first commercial plant operational, I think that attracts a lot of interest from a lot of larger players. But I guess that's what we're really focused on at the moment. And, I think it's inappropriate for me to make sort of forecasts on valuation and things like that. But the costs required, the investment required from Parkway to keep funding QBS, secure a site, perform feasibility studies, attract partners, and really get to FID is we're funding that sort of work internally. We're not talking about investing tens of millions of dollars, getting a project to FID and hundreds of millions of dollars equity to develop a mine or some sort of infrastructure. So I think we're pretty smart about that. But even with a minority interest in those investments, whilst our existing business is growing, it's not hard to, see us a business that's, sort of, I'm trying to resist giving you a multiple, but many times larger. And I'm confident that growth will continue. All I have is in the eyes of the market is just an idea. Whereas the moment I have a site and I can drop a 3D rendering and I can show
100%.
a timeline, this is what I'm developing, then this goes from being an idea that Bahia or Parkway is talking about to something that have a site, they have a project, they have a location, they have partners. And I think like an independent research report preparing that helps the market understand, oh, we didn't realize that you're going to produce this much. We didn't realize it's that valuable. I can't read what Donald Trump's going to tweet tonight, but what I can do is quarter after quarter, you know, we run a tight ship. I mean, you can see from our performance that, you know, off the smell of an oily rag, you know, I mean, what, we raised $2 million 12 months ago, and here I am sitting around trying to change the world with $2 million bucks, and you know, what do you get for that? So I think we're doing good.
Bahe, the connection just went a little bad. Maybe that's a sign for us also to say wrap it up here at this point. I thank you for this coup d'horizon, really on the company. I'm looking forward as an investor myself to the coming months.
Thanks, Sven. Great to be speaking with you. Thank you.